think we're good. Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
Hey everybody, really excited to talk about this topic today. Chris and I have been planning to talk about Bitcoin, but we've been sort of pushing it off. We're like, oh, maybe next year we'll talk about it. But I think just this being such a highly requested topic by our audience, and also that Bitcoin just hit an all-time high, I don't think there could be any more of a more pertinent time to talk about Bitcoin. So Chris, I mean, we'll see if maybe this week is when Bitcoin breaks 20K, but let's at least get this recording going before that happens. So I think the most important thing to do is define what is Bitcoin. I think Bitcoin is thought about in a lot of different ways. I think, at an arm's length, it is something that people tend to think of as like something that might be in the dark web, something that's used to fund illicit transactions. But what it is something fundamentally more than that. It is a monetary utility that I think, and I'm going to just share my implicit bias as we go through this. So everything that I say, think about that. I am a huge bull on Bitcoin. I'm a major proponent of the technology. But let's talk about what Bitcoin is. So Bitcoin in 2008 was founded by Satoshi Nakamoto, the anonymous group of persons or person that wrote the source code on Bitcoin. And what Bitcoin is, it is a peer-to-peer currency that is essentially it's a digital currency. And the way that Bitcoin was first started, as the Bitcoin was mined, the first block was mined by Satoshi Nakamoto. That was called the Genesis block.
Yep.
And the reward started at 50 Bitcoins per block. And every 210,000 blocks that are added, that reward rate is halved. And as of today, December 6, 2020, the reward for every block added is 6.25. So that's my brief summary of Bitcoin. Chris, feel free to take the wheel and tack onto that.
Yeah. So it's funny. I guess I have a small little story. So I was actually a Bitcoin bear in 2017. 2016, 2017 is when it was getting a lot of hype. And I kind of knew it was the wrong time to get into an investment, just because looking at the charts, they were going like asymptotic, and they were just, skyrocketing. Parabolic, yeah. So they were going up really quick, really fast. And I kind of, this is going to sound, more intuition than data driven, but I had been investing in my 401k and doing investing on the side in Robinhood and just doing a different couple things on the side since I graduated college in 2015. I really started with it and learning about investing, different asset classes and all that. So this is 2 years out from college or thereabout. And someone who had never started investing before ever was like, oh, like I'm looking to buy Bitcoin. And I was like, wait, really? Like something you know nothing really about. And they were like, yep, like I'm buying Bitcoin. I was like, you don't have a 401k, you don't have an IRA, you don't take advantage of anything that your company offers, and yet you're telling me that it's time to go and buy Bitcoin. So I was taking that as a warning of like, this is kind of like tulip mania that I think Ben and I talked about one of the previous episodes of, people just buying things for the sake of buying things because everyone says they're buying it. So I didn't buy in 2017. I was a bear, meaning I thought it was going to go down, and it crashed like anything. But that was kind of like, I guess, biased and not really knowing much about it. I heard about it. Everyone was talking about it. Didn't really know what it was. And when I saw it crash, I was like, well, it did exactly like everything that I thought would do. And then, cryptocurrencies was kind of always in the back of my mind, but I always kind of thought there was no real point or value to them until more recently, probably 2019, I was starting to like do some more research into it. And then really in 2020, in June, I took on a pretty big position, and then I've took on a really large position within the last 2 months.
Right,
So
right.
yeah,
Yeah, and honestly, Chris, in college, when I first heard about Bitcoin, um, I think the only thing I was really focused on at that time was like not failing out of college,
yeah,
just making sure that I passed. And what I had heard, I was mishearing Bitcoin. The first time I ever heard it, I thought the person was saying Bitcorn. So that goes to show my intelligence on the subject in the 2014 time period when I was a freshman. Scary, scary
yeah,
stuff. But wow, what growth and like what perspective has changed with my research in Bitcoin.
mhm,
So I think that's the key here is we're going to share sort of that like perspective altering research. And I think money tends to frame how we think about things. It's sort of that commonality about how we perceive the value of things. So Chris, a good segue here is, you know, let's define some common terms, like what makes something money, because I think it's very easy to inundate Bitcoin and think of it as something as a separate entity. Like the technology sort of saturates it and distracts from what the utility of it is. I think people think of Bitcoin as this, really highly complicated, which it is, sort of like coding thing that you have to be a software engineer to learn. But when you think about it, you swipe a credit card every day, and you're not using paper money. So it like the steps to get from credit card to Bitcoin, I don't think are very far. So I'd love to hear just how you frame what your definition of money is and what are the key components.
yeah. So that's actually a great place to start. Definition of money, Ben. Thanks for the introduction. So to define money, there's kind of 5 key terms that kind of go with it: divisibility, durability, recognizability, portability, and scarcity. So divisibility is you can take something and subdivide it and recombine it in a monetary medium at various scales. So if you think about, the US dollar or the USD, you can take $100 bill and you can give someone 5 20s or, $25 bills or 100 $100 bills. And you can even break down a $1 bill into, quarters, nickels, dimes, pennies. So very easily divisibility. Durability, a lot of our paper paper dollars and metal coins, they last a long time. Obviously, the paper has to come out of circulation more regularly than the metal coins. Recognizability, so obviously they have a lot of key watermarks, and the dollar bill has developed and changed, especially in our lifetime, within at least the last 20 years of adding different watermarks and different things on it to prevent people from basically authenticating that it's a US dollar, it's not forged or fake, and it can't be like easily counterfeited, basically. Portability, coins are obviously less portable or less enjoyable to port around, $100 worth of pennies or something like that. But obviously, with the monetary system, you can use dollar bills, which is a lot easier. And then scarcity. So scarcity meaning resistance to counterfeiting and its supply inflation. So preventing, it constantly going into more and more of it being accumulated and basically devaluing what it is. So the US dollar as we know it is what we call a fiat currency. Fiat currency meaning that it is not backed by anything. So basically, it's just we're passing around debt. And people kind of get confused by that. Back in 1971 or 72, 71, 72, I forget. 1971, I think it was taken off the gold standard, meaning that back in 1971, if you were to go to a banknote, it would say, I think, endorsed or rights to gold, or I forget what the original notes would say, but basically meaning that I could take a $20 bill and I can get $20 worth of gold at the time, whatever that equivalent exchange rate is. Right now, it's not backed by anything, meaning that we're just trading based on the trust of the US government and the US economy and, basically using the barter system to be like, yeah, this $20 gets me what $20 worth of goods would be. And there's a negotiation process of that. In the past, many different things have been used as currency: seashells, cattle, crops, salt. But the world kind of zeroed in on metals because they were deemed the best of the 5 categories we listed before for divisibility, durability, recognizability, portability, and scarcity. But yeah, and then for the longest time, the gold was backed, or the dollar was backed by the gold. But then once it was taken off in 71, basically it became a fiat currency. It was no longer a currency, and it was a fiat currency because back in the day, I think I looked this up, 1972, you get 1 ounce of gold for $50. Now to get 1 ounce of gold, that last time I checked, it was around the $1,800 mark. So obviously, why is it that that same amount of currency has disappeared in value? What would appear? Because basically inflation, and we can get into talking about that. So Ben, if you want to take over that.
Yeah, and that gold backing dollar, that policy, if anyone wants to look it up, is the Bretton Woods system, the Bretton Woods system. And I think really just summarizing what the transition from a gold-backed dollar to a fiat currency, we have placed basically a certificate. Was the gold-backed dollar. It was a certificate of value backed by a hard asset. And then once we switch that, the currency, the intrinsic value of that is now gone, and we are just left on faith that that dollar will be broadly accepted as having value. And that's what fiat currencies really are. It is the market has chosen and is sort of corralled into being forced to accept this as legal tender. And that all comes from the US government. For the US dollar specifically, the government has mandated that this is legal tender, and that is it. So they have full sovereignty over everything that happens with that currency. So that was a really good summary, Chris. I think having that understanding as we go through Bitcoin, I think to challenge yourself as you go through this is to ask those questions. Is this divisible? Is it durable? Is it recognizable? Is it portable? And is it scarce? In starting off with the latter, the scarcity, Bitcoin, why I'm going to purport that it is the best form of currency that we have at our disposal right now. In my opinion, I think of Bitcoin as fiat currency to its extreme, where you have essentially programmatically developed a currency that adheres to these 5 traits. And I'm going to start with the scarcity. So programmatically within Bitcoin, the max of Bitcoins that will ever be in circulation is 21 million Bitcoins. It will never get to 21 million Bitcoins. That is a program in the source code. It's sort of this like ever receding horizon that you will just walk into perpetuity and never arrive at that 21 million. And there is also it's called like a difficulty factor for if, as you're mining for more Bitcoin, no matter how much capital and energy you throw at mining Bitcoin, there is an asymptotic reward for how much Bitcoin you can get. So Bitcoin programmatically has solved for inflation. Into foreverness, there is a 0% inflation on Bitcoin. And I think people think of inflation as maybe being a good thing, that you in your bank account it might look like your net worth has gone up because your stocks are now worth more. But when you think about inflation, and this is why I think going on to the scarcity and control of that scarcity, talking about inflation, the Fed, if you haven't done the research, look into like sort of the quantitative easing. That's a QE. That's a really important thing to understand, or at least to be familiar of. The printing of US dollars, creating this surplus of supply of dollars. It may seem that, we're making just more money and that impact is not visible. But when you think about what inflation is, like when you give out a $1,200 check to Chris, I printed out money to give Chris. By what inflation is really doing is that the bearer of dollars, so if let's say I have $1,000 in my bank account, as the government's printing more dollars, that $1,000 that I have in my bank account is now not worth less, but it can now buy less. And that's what inflation is. And that's the danger of having a central authority controlling the money supply, is that they may be they have the choice to distribute cash to whoever they want, but it's at the detriment of others. So inflation takes from the masses to give to the wealthy. I think that's how I sort of think about inflation. It's an invisible theft.
Yeah. And kind of fixing in kind of there where Bitcoin fits in. So, like Ben was saying, there's only ever going to be 21 million Bitcoins ever created. And how we think it's better than the US dollar, because basically this year, the Federal Reserve just in July alone printed more money in 1 month than they printed in 2 centuries before that. I mean, I think this year's total was over $6 trillion. which is absurd. Like that, the amount of money is crazy. So basically, Bitcoin is not only a hedge against that, but literally in history, all fiat currencies fail. If they are not backed by gold or some type of commodity, they always fail. Because basically what that means is the Fed can keep printing and printing and printing, and everyone's money becomes, I guess you could even say, less valuable. Maybe not on terms of paper, like $20 is still $20, but that $20 goes a lot less far. So even if we're looking at it like the divisibility aspect, and basically they can both break down. So the US dollar and Bitcoin can both be divisible. And if you have less than one Bitcoin, the smallest subdivision of a Bitcoin is called a Satoshi, and that's one out of 100 million. So one Satoshi is 1/100th million of a Bitcoin, basically.
Right, it's in the 8th decimal point to the right.
Yes.
Would be okay.
Yep. So Bitcoin can subdivide a lot further than a dollar. A dollar can only go, into 100 pennies. So if you're thinking about that, $1 can only go into, 1/100th of that, by comparison. Durable. So obviously coins and dollars alike have to be, taken out of circulation if they're bad, where a Bitcoin is just literally on the internet. Unless the whole internet breaks, it's always on the internet, basically.
And that's a good point, Chris, about the durability. Even beyond just like the internet breaking, the thing about Bitcoin, and we're obviously going to talk about blockchain further, but the thing about Bitcoin being on the blockchain in this peer-to-peer sort of witness level proof of work monetary system, that even if one smartphone that still has a node, and every smartphone, every PC has been destroyed by some oppressive Hunger Games level government, that node can replicate the entire Bitcoin network, every other internet bearing device. Yep. So if you have one, you have it all. And that's where it's more powerful, because you can't create the US dollar circulation from $1. That's called counterfeit.
Yeah, definitely. So recognizability, kind of Ben just talked about it. Basically, every time a Bitcoin transacts, another chain or blockchain or block is added to it, meaning that it's literally a ledger that tracks what transactions were done. The way that it hides identity, it shows that it was sent from one device to another, but you don't know who is at the end of those devices because it's encrypted, basically. But basically, it shows that a transaction was done from this account to this account, and then that continues on the ledger. So then when someone else trades a Bitcoin, it adds to that ledger, and it keeps adding on. So then you could always track, and the only way to ever change it would be to have more than 50% of the internet agree that there's a change allowed to be done. But by doing so, you break the currency, and it basically becomes like a fiat currency, and no one would want to do that to preserve their wealth. So that's one of the ways that it helps preserve wealth. Portability, like I said, very easily, as long as you have an internet connection and a device, it can be easily moved across time and space. And it goes even across jurisdictions, governments, countries, anything. It doesn't care. It doesn't care about those things. And then scarcity, like Ben said, there's only 21 million that will ever be into circulation. So, another reason why we're very bullish on it is, like I said, this year alone, there's been about $6 trillion worth of money printed. They're trying to help the economy, but even kind of like what I was saying before, all fiat currencies fail. That's literally what they're designed to do. It's designed to be, keep expanding and growing. And part of the reason it hasn't come crashing down, they're like, well, Chris, why is this $6 trillion not, why is it not like, destroyed the economy and the world and everything? It's kind of a slow thing right now. The benefit from the United States is that we are the world reserve currency. So there's a couple things. So oil is only ever traded in US dollars versus gold, because they viewed gold as almost like a political metal, and people could hoard it and, prop up prices and stuff like that. So people were worried about that. So they actually put it in US dollars because they saw it at the time as the strongest currency in the world and strongest power and economy. So if they make everyone trade in it, it kind of holds its weight. But there's been economies that are not so lucky. You can look at Venezuela. You can look at a couple other countries that they've printed their money into oblivion by, socialist or communist leaders. And basically their currency doesn't mean anything. Right now in Venezuela, they're actually using, when people get paid, they immediately buy US dollars. So there's actually a need for US dollars in those countries. So it helps prop up our currency once again, that they buy it in US dollars because it's more stable, because the Venezuelan dollar is just going further and further down because it's a fiat currency. But little do they know, they're pegging their currency to another fiat currency that's going to fail, maybe in a much longer time frame, and there's benefits to the world not having the US dollar fail. But God forbid, Venezuela says we don't need it anymore. There's actually funny. Some people in Venezuela are now pegging their currency to Bitcoin. So they spend half of their salary into US dollars because they see it valuable now, but they're hedging against it by also getting Bitcoin, and they're actually transacting in South American countries using it. So just something very interesting that I thought I would note.
Yeah, that makes sense to me. Like, just to give a little bit of like contextual history of like why other countries are sort of like tethered to the dollar, is when the U.S. got off of the Bretton Woods system. What happened was that the U.S. dollar gold was pegged to the U.S. dollar, and every other currency was pegged to the U.S. dollar. That was the difference. So that we were right. Is that how you think about it? It's not the dollar being pegged to gold, but gold was rather pegged to the dollar.
Yes.
That transaction sort of flipped, and then all other currencies were pegged to the dollar. So we are sort of just this sovereign. We as the United States, the Fed. I'm not the Fed, but thinking of the Fed as sort of this entity that controls just global sovereignty over banking, over currencies. I think it's a really dangerous game, thinking that way, because it's sort of like a referee in a soccer game who no one knows the rules except for the ref, and mid-game they can change the rules.
Yeah.
And that's sort of what's happening with this money printing. You're debasing this currency. So just what we were talking about earlier, the reason why we're defining these key terms is what's happening is the key terms of defining our goods, our services, is totally out of whack. We do not have sound money. So, when the price when you're trying to buy gas, when that price changes on a day-to-day basis, because the US dollar is changing its supply so in such an exacerbated rate, the $6 trillion that Chris just talked about, you don't know if there is an oil shortage or if we're just printing money out of the wazoo. The common term to talk about goods and services is changing. I want to sort of change topics a little bit and dive into the divisibility piece of things. I was talking with one of my friends, and she had brought up the point, divisibility and scarcity kind of go hand in hand. Chris, I want to know your thoughts on is there a danger of a wealth gap for early adopters, governments sort of buying Bitcoin en masse, knowing that there is a fixed supply? What are the risks that you see of wealth disparity of Bitcoin, and how does Bitcoin purport to solve the wealth gap, in your opinion?
Yeah. So if large people start taking up portions of Bitcoin, the thing that I think actually helps is, one, it would prop up the cost. So, and by the cost, I mean the price per Bitcoin in US dollars. It would prop it up because now they're taking a bunch of coins out of supply, and whether they keep it liquid, as in they keep moving it in the economy, or they keep it fluid or liquid in the Bitcoin environment, that would help. But also, if they take it and hold it, it actually props up the cost even more, because they're taking money out of supply and people need it or want it. And then the value based on US dollar would go up once again, because that's, if a government were to come in and grab a bunch of these coins and then not use them, that reduces, it's a simple supply and demand. So the supply, a lot of it was removed, and the demand is still the same, or maybe it goes even higher, the price would continue to go up. So I see it as something that could really, early investors, and I consider now even very early in the investment process of buying it, because to this day, I mean, we still haven't really seen the full effects of the $6 trillion that was printed. A lot of it went into hard assets. A lot of the wealthy used that money to go right into the stock market. So that's part of the reason that we saw the economy recover so quickly. The fiscal economy and the actual economy are kind of, or the financial economy and the actual economy are kind of different, which is weird to say, but the stock market, you saw it drop off very quickly in March, and then it recovered rapidly through April, May, June, July, August into September, and now we're kind of hitting all-time highs or hovering around all-time highs. Is because a lot of the wealthy, quote unquote wealthy, put all that new money that they got through their businesses back into the stocks. So even though a lot of companies were firing people, laying off jobs, reducing headcount, there's not the same number of jobs, so the unemployment rate's still high. The economy on paper looks good, but we also one important thing is the velocity of money has been doing a steady decrease since we came off the gold standard. So it used to be the velocity of money is defined as the number of times a dollar changes hands in the course of a month, I think is what they do it, or a year. It's within a month. So back in the 70s, it used to change hands 2.4 times per month, meaning that, Ben, I pay Ben for gas because he's a gas station owner. Then Ben takes that dollar because he's the owner of a gas station. He goes to the supermarket to buy groceries. He buys those groceries, brings it back to his family. The grocery store takes in that money. They buy more groceries from a supplier or a farmer. That farmer gets the money, and then he goes, and it's kind of always circulating the economy. Right now, I think for the first time, it's breaking, not for the first time, but it's breaking one, meaning that it's falling below one right now. So meaning that the dollar, there's a lot of dollars in the world, and relative to all those dollars, they're not circulating a lot because a lot of them are tied up in stocks or bonds or different things of that nature. So, over time, exactly what Ben's saying, a gallon of milk might go from around $3.50 or $4 where it's at right now. It might go up to $8. A gallon of gas might go from like somewhere in the $2 to $3 range all the way starts jumping up to $3 to $4 to $5. So that's going to be more expensive for people that are, middle and lower class. Their expenses are going up relative to the amount of money that they're taking in. And we can even talk about, we can get all deep into, the wage gap or the minimum wages kind of stayed the same for literally decades. And it's not, that's why people are saying it's getting more and more difficult, trying to increase the minimum wage from $8 to more 15 is kind of what they're shooting for.
Yeah, opining kind of what you had just said. I'm just like developing this thought as I speak. But that I didn't know that about the money velocity or the velocity of money. A really important thing to understand is
we'll include that in the show notes, definitely showing the
Yeah.
velocity of money chart. It's very interesting to look at.
I would really like to see that, and I think that's a really psychological thing in the behavior of money is seeing. I feel like the velocity of money, and I haven't done enough research on it, I think could give a lot of insights about the economic trends of that time. I think understanding how people are thinking about money kind of frames that behavior. So I was thinking on what you said about the velocity of money going down and moving to stocks. I think why I really see Bitcoin as a valid monetary system is that I think though imperfect because humans are imperfect, I think that it does purport to solve the wealth gap. And the reason why I say that is I think people will say, okay, there's only 21 million Bitcoins in circulation. What if I'm trying to get a Bitcoin or any amount of Bitcoin? I think that divisibility piece is a key thing. By being able to split a Bitcoin into 8 units to the right of the decimal point, which can be changed, the source code can be changed to add more decimal points.
Exactly.
That doesn't mean that the Bitcoin is worth anything different. It just means that you can get a smaller amount of it. You can make a penny be worth less. Because when you think about it, let's say you have $10, okay? $10.00. If you're feeling like it, you can put 1,000,000 decimal points of zeros to the right of the decimal point.
Yep.
That means nothing to me. So I think that's the key thing. The divisibility is programmatically decided, but all that means is that a fixed supply asset can be divided perfectly and infinitely, which I think is a key thing to be able to solve sort of the wealth disparity. Let's not worry about that specifically, but I think because interest rates are at zero, bank account savings are like zero. They might as well be zero. They're sort of deplorable. There's no ability to save money and preserve your buying power at this point. And because we're printing money so exorbitantly, that's why like you just said, why money is being pushed to equities, because people are seeking yield in whatever way they can, and you're not going to find it in the bank account. So if like your priorities, like in your own sort of like economic standing, if you're in the lower income bracket or sort of middle income, your key priorities are eating, surviving, living, and paying your bills. Mm-hmm. It's really sort of a detriment to your net worth to be putting money into a savings account while also preserving liquidity, because when you're trying to pay off bills and those immediate expenses, liquidity is an absolute asset. You don't have time to lock up into stocks just yet, Maybe you are, but it's probably not at the level you need. So I think what's so nice about Bitcoin is as a currency, and what makes something a reliable currency is it is a reliable store of value. It is a trusted medium of exchange of value across time and space, as you described it, Chris. And the US dollar doesn't achieve that reliability of preserving value because every day it is being worth less by printing more. Now, Bitcoin is growing the amount of Bitcoins in circulation up until 2040, right? Or is it 2140? 2140.
2140.
2140, we will achieve that like event horizon where we get no closer to 22 million or 21 million Bitcoins in circulation. Going on a tangent here, but the nice thing about Bitcoin, and like do your own research, I think it is just better as an insurance that if Bitcoin does take off and gets adopted, having even a little bit of Bitcoin will bode well for the long term because it stores its value well, because just like a fiat currency, its value is in its medium of exchange. And the difference between me sending a Bitcoin to Chris, I can just email him a Bitcoin if I wanted to. I could send it on Coinbase or Robinhood. I don't think Robinhood supports it. Coinbase for sure. Frictionless. He'll get it within minutes. Yep. But if Chris were to fly to Italy and I wanted to send him some US dollars, what, 30% is going to be lost in foreign exchange fees. It could take 3 to 5 days. And there's a chance that Italy will just say, you know what, we're not accepting foreign exchanges. And that's it. That's their right. So the difference between Bitcoin and these fiat currencies is decentralized, which is strange. I'd love to hear your thoughts, Chris, on, I think it's almost intrinsic in people's thoughts that money is owned by the government and that is what it is. And that's a good thing. What, for someone who says that, you know, Bitcoin will never be accepted by government, or that in order for a money to succeed, it must be owned by someone, what do you say to them?
Yeah. So I think, actually, not to cut you off there, but I think this is a good stopping point for part 1 to end of our episode. So I think we're going to take a break here, guys, and we're going to break this up into 2 parts. We've heard you guys. So it's been awesome getting feedback from you guys, but we're going to take a break right here, and then we'll pick up on this conversation for episode 2. So stay with us. Stay tuned for next week, and looking forward to having you guys there. Hey guys, thanks for listening to part 1 of the Amateur Investors. We're talking about Bitcoin. That was part 1. We'll be doing part 2 next week. So thanks for listening, guys.